Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. Welcome to Trade 22. In this trade, we had to wait several days before we even made an entry. You can see on the screen that after we made our prior exit, the market jumped up quite a bit and we were missing out on some opportunity. But over the next several days, the market started to fall back down. It kind of reminds me of this boardwalk at Myrtle Beach, South Carolina, where sometimes it's taken a left, sometimes it's taken a right. You just don't know sort of where you're going to end up. But on this particular day, Adam decided to go back in here at the end of the day. We entered in just slightly above where we exited prior. So luckily we didn't miss out on too much opportunity, but we did miss out on just a little bit. But we're going to go ahead and watch that trade happen live. And you're going to see that happening right now. So what happens the next day? Well, the next day, luckily, the market gapped up a bit and started to continue to run. So things are going pretty well as far as day one into the trade. The following day, market gaps up again. So we're starting off on a pretty good note here, starting to gain some profit, and that always makes us a little happy. This trade continued on for several more days. So here is 4 days in, we're still climbing. Life is pretty good here. Following day, market gaps up a bit, pulls back, but generally pretty good. You can see that sort of happening. Market recovers the following day. Things are going great. And this continues on for a bit. The next day after that, really nice gain in the market. So far this trade is looking really good. And you can see here, following day, the market's still very strong. The S&P 500's up. Our trade is in the positive. Things are going great. A little pullback on the next day, but still, we're still showing some good profits, and that's working out pretty good for us so far. Next day, market's about the same. It starts to level off. You know, typically we'd be looking for some type of an exit here. We feel like the profits are sort of worn out here, but the market continues to drop, and then the following day gaps back up. So we very much like that, and this trade is continuing to run. So we're now pretty significantly into this trade. I mean, it feels like we're just sitting waiting for the right exit to happen. It kind of reminds me of this sitting on this beach just watching these waves come in. We're just waiting to find the right exit. So the following day, market gaps up. Things are looking really good. But then came some bad news. On this particular day, this is the day that the ratings for the U.S. government debt fell. Now, is that what caused the market to go down? I don't know. But pretty significant drop at this point. This green square that I've had on my chart here kind of shows you the place that we entered in and how much it had gone up, and ultimately sort of where we're landing on this trade. But on this particular day, Adam said, let's just call it here. We're going to go ahead and exit, and you can watch that trade happening live. You can see the order going in, and it is closed, and that is the end of trade 22. Let's head over to our tracking sheet and see how we're doing year to date. All right, that trade closed on August 2nd. We were in that trade for almost a month. We had about 6 or so days. We were out of the market in cash and then went in sort of at the beginning of July. On August 2nd, the S&P closed at 40.53, bringing the year-to-date total to 17.73. That's a great gain for the S&P 500, given that we're just over half a year in. On that particular trade, We gained 4.34%. As you saw, that last day we lost quite a bit of the potential there, but we still pulled out with a profit. We'll take that. That brings our year-to-date total to 31.6. If you're tracking some metrics down here, winning trades are at 81% for the year. Again, this is sort of unusual. I'm expecting to take some losses, so don't be surprised on the next one if we do. Our profit factor is sitting just below 3 at 2.97. Again, that target should be 1 or better. I think we're doing all right. On our charts, 17.3% for the S&P if you're buying and holding it. If you're trading with me, 31.6%. If we're looking at the 3-year chart and also including trading the S&P is at 7.73. The spiders I did not trade that over the last month or so, so that's holding at 13%. So trailing the market there, trading SSO definitely ahead of the market. Again, I'm watching the S&P trades because of what happened last year when we had a pretty bad year. The S&P, with Adam trading it, seemed to do much better. So ultimately, in terms of managing risk and rewards, I'm thinking about blending these two together. But that probably won't happen until later this year. And again, I'll continue to track these and see how they do. So overall, I'd say we're doing pretty good. And again, 31.6, we're halfway into the year against 7.73. So far, so good. But don't be surprised if we take some losing trades. But what we're hoping for is actually continued pullback in the market and buy back in at even a lower price. And we'll have to see what happens on our next trade. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only and should not be taken or interpreted as advice. Until next time.